You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution and trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music can mean only one thing. It is Friday. It is noon Central, 1 p.m. Eastern. It is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we think so, Options Insider Radio Network. This is our final program here for our broadcast week. But if you just tune in to Vol Views, man, you're missing out on a whole heck of a lot. So make sure wherever you're getting this show, first, you upgrade to the full network. And then B, if you like what you hear, keep rating and reviewing. It really does help a legion of new people discover all the different content that we do throughout the week here on the network. Of course, keep those questions and comments coming too. We do love to hear from all of you folks out there. Let's see who we're hearing from on the old program today. First, let's go back down deep into the heart of Texas. We were joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com, by way of a Robinhood trader near you. Mr. Meatball, A, welcome back to the program, and B, I know you're down there in the Texas lands now, so maybe, I don't know, maybe you're a Cowboys fan now or something, but how excited are you the Bears maybe finally have a quarterback, sir?
Dude, I was like ecstatic when I saw who they drafted. I'm a big fan of Justin Fields. I like the way he plays. I was really nervous they were going to get Mac Jones, but
I think
that
everyone
ended up
was.
being your Patriots. Your Patriots pick up Mac Jones. So how do you feel about the next Tom Brady, I'm told?
Yeah, we haven't heard that one before, the next Tom Brady. But yeah, that's the only guy I wanted the Bears to draft was Fields. And turns out they traded up and got him. So surprising, stunning They actually maybe made it perhaps a deft draft move. Surprising. But hey, this is not Bears talk. That'll be another show on the network. Instead, let's move on out now to the MIAX hot seat. We are joined by a newcomer to the program. He is Matt Mcfarland. He's in charge of all the business development for the MIAX futures and derivatives products. Matt, welcome to the Volatility Views program, sir.
Thank you, Mark. Pleasure to be here. I've listened to the show from time to time, so it's an honor to be a guest on the show.
Well, if you've been listening to the show, you know how we kick things off. You're a first-timer here, so why don't you go ahead, give our audience a bit of an overview of your background in the derivative space, as well as what it is you're doing day-to-day over there at MIAX.
Yeah, absolutely. So I just joined MIAX this month. So at the beginning of this month, I started here working mainly on our futures products, which, focusing on our Spikes futures right now. That we do have other futures products in the pipeline that we'll be coming out with. Prior to joining MIAX, I spent 13 years at SIBO Global Markets in various different roles within SIBO.
Never heard of it. What is that?
It's a little exchange holding company out of Chicago that may have had a little bit of something to do with the creation of the listed options markets, as well as the creation of volatility as an asset class in and of itself. So they've accomplished a few things in their time. I ran their futures business for a while. I was over in London for a while, promoting their proprietary products in the UK and the continent. And I also worked in various business development roles for the exchange, covering market makers, hedge funds, insurance companies, retail. So really like this derivatives business, and wouldn't be in it for so long if I didn't like it so much. But prior to being in the exchange space, I worked for J.P. Morgan and legacy banks of J.P. Morgan in equity derivative sales. So really excited to be here with you guys this afternoon.
I think you're joining a pretty interesting team over there at MIAX. They have a lot of interesting irons in the fire. It's like every other week there's a new announcement in a different asset class over there these days. So they're certainly going to keep you busy, as will we, as we continue on with our show right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we break down what the heck is trading out there, what's lighting up our screens throughout the week, as well as what's popping off today. We'll start in the latter category because it seems like this thing's picking up a little bit of a head of steam out here. Earlier in the session, we had most of the vol products kind of languishing. They weren't really doing a heck of a lot, up a little bit now. But as the sell-off seems to be maybe getting a little bit more teeth, we got the S&P and the Dow both off. Actually, on the NASDAQ, all around a similar percent, all around nearly 0.5%, a little bit more, a little bit less out there. Vol products, though, starting to kick it into higher gear. Come into showtime now. We had Spikes and VIX languishing around the 17 handle not too long ago. Now they're up to around a 19. Spikes was at about a 19 exactly when we kicked off the show, up about 2.5 points. VIX was at an 1860, also up 2.5 points. So this kind of continuing this cycle, they do seem to like to pop the vol products on a moment's notice out there these days. Oh, what's that? A whiff of a sell-off? Bam, here we go. A couple of points here or there. So that's definitely seemed to be par for the course. Whether or not it can maintain that lift, that's the question everyone has right now. VVIX coming into showtime at about a 107. That's actually down a bit from our last show, down about 3 points out there. So that's the lay of the volatility landscape. Matt, we'll start with you, sir, because you are the newcomer to the show out here. Obviously, a lot's been going on. I'm sure you're pretty busy with your nose to the grindstone over there across the broad suite of products over there at MIAX. But did anything out there catch your eye from a volatility trading or trending or unusual activity perspective this week, sir?
Yeah, as I've been looking at the Spikes index, it's been ranging really between 17 and 19 this week. And as you said, we're at the upper end of that range. So, as the S&P 500 is continuing to make new highs, there's been relatively quiet in the vol space with the exception of perhaps today and yesterday, where it is creeping at a bit higher, without too much of a major sell-off. So that could be the market may be signaling something to us with that spikes creeping a little bit higher here.
Certainly does seem to be signaling something. Easy for me to say. We'll see if we can parse it out over the course of this show. Mr. Meatball, same question for you, sir. What are you keeping an eye on as this sell-off seems to intensify a little bit, at least when it comes to the vol products gaining some steam, sir?
Yeah, what I would say is it looks like the vol has stopped dropping. And, you do have some people. If I hear sell in May and go away one more time, I may rip off my ears and throw them at the person.
Oh, you mean the title of this episode, Sell in May and Go Away? Should I not use that?
Yeah, no. But you definitely have some positioning going on. We're seeing some put buying, some profit taking. I think that you've got kind of some end of month window dressing that's taking the S&P down, but valuations are so high. And, these tech companies have all announced earnings and they were great, but they just weren't great enough because they were already pricing in great. And so, yeah, you see the S&P down, you see the NASDAQ down, the Russell 2000 is down, and the VIX is higher and is, like I said, has kind of stopped dropping, which should be raising an eyebrow to traders.
Definitely is in that stopped dropping, at least for the time being out there. Well, again, we'll see these spikes, pun intended, can be short-lived. I was discussing this with someone earlier this week who was talking about wanting to invest in VIX calls, and I was explaining to them, the very short-lived lifespan of some of this upside sometimes, and that seemed to maybe dissuade him from diving back in. Let's see if we can dissuade you or perhaps persuade you to dive into the vol space today. Let's kick it off out there in the realm of the futures, VIX futures curve. The front portion is obviously looking a little bit different. That front portion is changing up. The latter portion still has that kind of plateau shape. It seems like it's plateauing around 24.5. That seems to be the apex around the October contract out there right now. Front portion of the curve, though, getting a little bit, shall we say, juicier out there as that cash is kind of swinging around wildly. Front portion ticking up a little bit. We're seeing the May future right now coming into showtime and still right about now as about a 1 point premium to the cash. That's about 2 points lower than last show. Of course, a lot of that being the cash just getting frothy out there. Same deal with June. It's about 3 points over the cash right now, which again is about 2 points lower. So the cash swinging around wildly and causing a little bit of inflection there at the front portion of the curve. Mr. Meatball, anything catching your eye out there from a VIX futures perspective this week, sir?
Yes. The curve has definitely seen some shifting. We saw the front end of the curve actually steepen a little bit relative to the back end. So what we really saw was a lift in July, a lift in August, and a lift in, kind of the whole back end of the curve. And then the front end of the curve, relative to those back ends, not move as much. So we've seen that front end of the curve steepen. Obviously today they're all up and you do have a little bit of flattening, but I find it interesting that we're seeing, the relationship between May, June and July really steepen up every time the VIX drops, which means you're seeing May lose a lot and you're seeing June lose a lot. I also think, and I know we'll get to this, that the VXX reverse split is having some effect on VIX futures. The May future definitely saw, I think some increased activity from that reverse split. And that has definitely caused it to maybe get a little more volatile here.
Yes, a lot to unpack there as well. We will get there. But first, let's go out to the land of Spikes Futures because that is Matt's domain. After all, he is the prince of the Spikes Futures kingdom. We don't get a chance to talk a lot of Spikes Futures here on the show, but I know they're trading over there in MGEX. Matt, so why don't you catch us up? What are you seeing out there from a trades and trends and developments perspective over there in Spikes Futures land, sir?
Yeah, we just started, and one of the things I've been focusing on since I joined MIAX earlier this month is building liquidity in Spikes Futures. So as a relatively new product, any new exchange traded derivative product, building that initial liquidity base is always the most challenging thing to get the product off the ground. So we have a incentive program that we launched at the beginning of this month, and I'm working with market participants to get folks involved in that, and expect more to be involved in starting next week. So I think we're going to see a jump in market quality and volume beginning next week. So far, I've got to say I'm pretty pleased with where things are with the limited number of market participants we have. We're seeing one tick wide markets about 50% of the time during the U.S. trading hours. I think that's been trending higher. I think that's going to continue to trend higher going into next week and beyond, because we are adding more liquidity providers to our market. They're mainly focusing on the front end of the term structure and the May and the June contracts right now. That's generally where most of the interest is anyway. So pretty encouraged on our liquidity profile as it is right now and where we're going.
Speaking of encouraging, it seems like all these incentive programs you guys are putting in on the futures paying some dividends over there on the options front as well, Matt. I'm noticing some interesting paper going up this week. A couple of heavy days out there in Spike's options. Why don't you break it down for our audience? What's going up? Looks like some funky vertical action out here in Spike's this week, sir.
Yeah, we had a couple decent-sized trades, one on Monday and one today, very similar trades. Customer was a seller of a 23.28 call spread against buying 21 put in Spikes in May, along with selling June 50 call. They sold the June 50 call on Monday. Today, they did the same thing, except instead of selling the June 50 call, they sold the May 40 call. So from the customer's perspective, selling the 23.28 call spread, buying the May 21 put, this is essentially a bearish view on Spikes or a bullish view on this on the market. They're anticipating that Spikes is going to drift lower, and with the exception of what we're seeing today, the market making new highs. Perhaps it's a decent position if you hold that view that we're going to continue to make those new highs in the market, and perhaps the distribution of the vaccine and how well that's going in the U.S. plays a factor in this as well. Pointing to potential return to normalcy, so to speak.
Yeah, it's an interesting one going up 500 times today. What threw me off, Matt, was the extra kicker on the June calls. I had to look twice to make sure because this guy's getting short units to the upside, which can be a risky go if we see another aggressive sell-off. But our friend here doesn't seem like he's too concerned about that. So as you mentioned, a bit of a bearish trade and going up for size both on Monday and a similar trade out there today in Spike's options. So let's break down our top 5 positions out there really quick in Spike's options right now, all pretty much around the same size as the June 25 puts. Number 5, number 4, the May 28 calls. Number 3, the May 23 calls. Number 2, the May 21s. And number 1, actually, with the bullet out there right now, the biggest position, the June 50. So he's actually short more of those, which is kind of interesting. Doing that on a bit of a ratio. Again, I can see what's behind that, but, the old school market maker in me gets a little nervous with net short units on craziness to the upside and a product that we've known, pun intended, can spike when it wants to out there. Interesting stuff. We'll keep an eye on that. That's out to June, so that's not that far out there, but still it's a little bit of a ways out there. So interesting to see if we'll keep an eye on that 50 strike. I think he's pretty safe, but you never know. Going on out to VIX options land now. Kind of a different story out there in VIX land right now. Kind of anemic. Not a lot on the tape right now. Only 164,000 contracts on the tape coming into this segment here. The ADV also down to about 493,000. That's down about 10,000 from last show. And again, below that 500,000 mark, it's kind of been languishing below for a while now. Remember, not that long ago, they were at 700,000, if not more. So it's come off quite a bit out there in VIX land. In terms of where the action is in VIX from an overall open interest perspective, what the big dogs are out there. They're still the big dogs. Let's see what else is open in VIX land. Only cost you 117,000 contracts to break into the top 10 right now in VIX. That isn't a lot. That gets you to the May 18 puts. By the way, 70-30 right now in the top 10 puts over calls. So folks still leaning short. We'll see if today's action has any impact on that. But right now, still puts leading the dance out here in the top 10 in VIX. Number 9, 117,000 as well of the June 17 puts. Number 8, 119,000 of the May 20 puts. Number 7, 119,000 as well. Got some ties down the bottom here at the top 10. The May 21 puts. So here's all of our juicy little put strip. Number 6, 135,000 of the May 17 puts. Number 5, 158,000 of the May 16 puts. Number 4, $1.60 of the June 15 puts. Then our top 3 listeners, all calls. So read into that what you will here. 162,000 for number 3 of the May 60s. And then number 2 and number 1, still that vertical that went up a couple of weeks ago for size. It's that July 25-40. The 40s have about 250,000 contracts open. The 25s have 261,000. So the most sizable positions are in the calls, but there's only 3 of them out of the 10 here. And you have to go all the way up to number 2 to even pass 200,000 in open interest. So interesting time, still a little light out there in VIX land. Total OI about 7.7 million, about 4.6 million open on the calls, and about 3.1 million on the puts. So calls net OI are still outdistancing puts again, which is starting to get to a more normal structure for VIX like we used to see in the past. For a while there, again, it was equidistant, if not puts leading the dance out there, which is a little bit strange for VIX. Like we said, today, not a lot on the tape, only 164,000 contracts so far. The most active contracts today, we have the May 23 puts, 15, almost 16,000 of those going up, followed by the May 42 halves of about 14,000. Number 3 are the May 19 calls, 11,000 contracts. Number 4, also around 11,000 of the May 21s, and round out the top 5 here, 8,500 of the May 20 puts. Yesterday, a little bit more paper on the tape, 426,000 contracts, the most active contract yesterday. The June 17 puts, 23, almost 24,000, followed by the May 47 halves, 19,000 of those. Number 3, the May 65s, back up to those funky strikes, listeners, 16,000 of those. Number 4, 16,000 as well of the May 23s, and rounding out the top 5 on Thursday, 16,000 of the June 20 puts. Getting out to Wednesday, another light day, only 361,000 contracts on the tape, even though we saw some decent prints. The most active contract was the June 16 put, going up nearly 40,000 times, followed by the June 15 puts for about 39,000. Number 3 was the June 17 puts, 22,000. Number 4, July 15 puts, 16,000. And rounding out the top 5 there on Wednesday, the May 32 halves with about 16,000 there as well. Tuesday, again, another kind of light day, 431,000 contracts, a light week overall in VIX land, listeners. The most active contract, 30,000 of the June 45s, followed by 26,000 of the May 65. So again, back to those interesting strikes. Number 3 here, 21,000 of the May 30s. Number 4, 20,000 almost exactly of the June 18 puts. And round out the top 5 here, 19,000 of the June 65 calls. And kicking off the week, a very anemic day, 282,000 contracts trading. On Monday, the most active contract, the June 47 halves with about 22,000, followed by the June pars, back up to the par strike, the 100 strike, listeners, 21,000 of those. Number 3, 18,000 of the June 45s. Number 4, 15,000 exactly of the July 16s. And rounding out the top 5 on a pretty anemic day here, listeners, the May 35s with 12,500. Mr. Meatball, I know you love those June pars. In fact, I'd be surprised if you didn't piggyback on those. But outside of that, anything else catching your eye this week in VIX options land, sir?
Yeah, you know what surprised me was, we had kind of an update for VIX on Wednesday, and yet all the volume was driven by put buyers. And we're kind of seeing that again today. The biggest trades of the day so far are the May 23 and the May 20 puts. We have seen some action on the 42.5 calls, but by and large, all of the kind of big paper, the huge trades that we see, all the leaders, continues to be mean reversion and downside trading.
That does seem to be the case. Let's get on out to some of the ETPs then, and we could see if that is going on out there in the products you folks love to fade. Let's get on out to VXX. Like you said last week, the moment you all were waiting for, the reverse split had happened back up to 40, had given it up, got down to the low 38 level, listeners, earlier in the week, bouncing back up, as you might imagine, a little bit again today as a result of this little bit of juice back in the vol space. That gets it up to about a 39.5 right before the start of the show. That puts it down about half a point from where it was last week. Still kind of light volume out there. I think some of that may be being reflected in the fact that, A, it's a pricier underlying now, but also B, I think maybe still some symbology issues. We were talking earlier about having trouble finding the weeklies out there for some people in VXX. So still some issues to be worked out as a result of the reverse split. The ADV also reflecting that. It's down to about 230,000 contracts. That's down about 64,000 contracts from last week. So the ADV still taking a hit out there in VXX. Let's break down the top positions out here. These looks like these are not split adjusted yet, really, in terms of size here, because we're still going back to the old strikes that everyone was fixated on, listeners out here. Let's see. Let's do a top 5 out here in good old VXX. Number 5, 33,000 of the SEP 10s. Remember, these are probably going to be adjusted 4 for 1 here out here once these numbers are all updated. Followed by 34,000 of the May 11s. 39,000 for number 3 of the May 9 puts. Numero dos, 49,000 of the May 10 puts. And rounding out the top spot here, 51,000 of the May 12 calls. You go look for those in your OI listeners. You're going to see those adjusted 4 for 1. So a little bit of a different beast out here in VXX. We're going to start seeing some of these more relevant strikes start to make their way into the discussion pretty soon out here as well. In terms of top trades, there actually was some action. There's some action in UVXY. We'll get to that in a little bit. Some action out here, a little bit, really, in VXX today. In the top 5 positions, number 1 out here, 68, almost, let's say about 7,000 of the May 10 puts. The April 10 puts. These are going out today, so obviously some closing paper, followed by 6,000 of the April 10 calls. Again, also going out today. 5,000 of the May 40s for number 3. 4,800 of the April 9 calls, again going out today for number 4, and round out the top 5 in VXX. The April 10 half puts going out today, about 4,000 of those. Mr. Meatball, A, how excited are you and the crazies to have VXX back at a level you can sink your teeth into it again? And B, what are your thoughts on what's been going on out there over the past week?
Well, there was a lot bigger trading in UVXY, but it's, 1/10 the size of VXX. Yeah, it's really interesting. They are starting to take VXX volatility down a little bit, but that decay really ramped up when it reverse split. I mean, it was pricing in about a quarter a day in decay, and my pit crazies are all about fading that thing, and we're positioning themselves in May, the 39s, the 40s, the 38s. In our volatility edge product that we carry at Option Pit, I was positioning a 39-35 put spread for, about $1.90. And I really like that spread as a trade that takes advantage of really not volatility dropping, but just some of the wind coming out of VXX over the next, 20 days.
Yeah, it does seem like it's primed for some vol erosion, obviously today notwithstanding. Just general erosion out there in the future space as May comes in. Should carry VXX along with it. We shall see. You mentioned UVXY. Let's get out there. Haven't had a chance to talk about that too much because there hasn't been a lot going on out there. Today being the exception. UVXY not moving a ton. It's at a 4.5 coming into this portion of the show. Puts it down about 1/10 of a point from where it was this time last week. But the paper is going up out there. The ADV has dropped to 210,000 contracts. That's down another 10,000 from last week. But guess what? Already 210,000 contracts on the tape. So going to be an active day out there, including it's like some big prints. Looks like maybe a roll of the April 30s. So obviously expiring today, 4 half calls going out against the May weekly. So only going out a week. That's already gone up, Mr. Meatball. Looks like it's gone up close to 50,000 times. 49,000 on the April 4 halves going out today, and then about 43,000 on the May 4 halves expiring on the 7th. This one come across your radar today? This pretty sizable roll out there, and anything else catching your eye in UVXY these days, sir?
Yeah, that was a huge roll. They're going long those 4 halves for next week. It's a short-dated vol play. Makes a lot of sense if you think the VIX is going to keep going higher. Pays out well if we, get to 21, 22, 23. But, again, there's kind of a big contango. This isn't the most sophisticated way to get that kind of upside leverage. So I don't know how much stock I put in it, but it is definitely a direct play on UVXY making a pop.
It's interesting they only went out a week. Usually this kind of size, they may get themselves a couple of weeks, but they only went out a week. So they need this thing to happen and happen aggressively. Or maybe we'll see this trade go up again next week if they continue to roll it. I have a feeling we may see the latter, but we'll see. This is one of the larger prints we've seen in UVXY for some time, and obviously maybe going to juice that ADV back up to a more respectable level out there. Let's break down the top 5 out there. And UVXY as well for all of you folks who are still stubbornly clinging to trading this very anemic product right now, which I do believe they have announced their reverse split coming pretty soon for this one as well. Number 5 out here in UVXY, 23,600 of the April expiring today, 7.5 calls, followed by 44,000 for number 4 of the April 5s also going away today. Number 3, 47,000 of the June 5s. Number 2, we have the April 7s, 47,000 of those also expiring today. And number 1 out there, 62, almost 63,000 of the April 4.5s expiring today. Again, that's probably what we're seeing getting rolled out there right now as we continue to see the 4.5 strike stay in position. Of course, we'll see the May expiring on the 7th, 4.5s on the show next week. We'll see that those pay off or if our friend out there is going to keep rolling. You know, it has been an action-packed thing to keep an eye on this week, listeners, is earnings vol. It's that time of year, listeners. Big names are popping off, names that you folks like to trade. Let's just run down a few here. On Monday, we had Tesla, a name you may have heard of, followed by on Tuesday, we had Alphabet, Pinterest, Microsoft, Starbucks, Visa, Crocs of plastic shoe fame, GE, 3M. Wednesday, Apple, Facebook, Qualcomm, Boeing, Spotify, CME. So a couple of our friends across the street, Boeing and CME popping off on Wednesday, eBay on Wednesday as well. Thursday, Merck, Mickey D's also down the street here, as well as Amazon, Neo, and Twitter. Friday, ExxonMobil, AstraZeneca, an interesting one to watch these days, and Chevron. We got all the earnings move and earnings move results for you hot off the presses. You know where to go, theoptionsinsider.com. Click on the options news and articles tab, top right corner of the homepage. That'll get you to all this good stuff and a whole bunch more. Let's run down a few of them here. We were talking about Ford yesterday. They kind of outperformed. They were pricing in 4.7%. They delivered 9.8% out there in Ford land. So interesting times for Ford. They had good numbers. Like most of these names reported excellent revenue that they haven't seen in years. You know, Microsoft, Facebook, Tesla, and yet they all had something else kind of hanging over them. Ford, for example, had the chip shortage, going to take a hit for about $2.5 billion on the chips, and that really seemed to spook folks. All these other names, Apple and everything else, reported gangbuster earnings, and yet it does seem like the market was a little bit skeptical as to, is this really sustainable? And as Mark alluded to earlier, they already have priced in earnings that are beyond gangbusters. So even at these ridiculous earnings levels, it wasn't enough to sustain things. Hence, perhaps the reason why we're seeing this sell-off today, even though at the end of the day, you know my rationale, listeners. More sellers than buyers out there. eBay was on the 28th after the bell as well. They were pricing in, they were at $62 and went to their announcement. They were pricing in 6.1%. They delivered 11.5%. So a little bit of outperformance. By the way, you heard Matt on the show last week go out on a limb and say he thought this might be the cycle where we start seeing some earnings vol start to matter again and start seeing some outperformance in terms of names actually outperforming their straddle. I asked him about it earlier this week on the show, on our Advisors Options show, though. He seemed like he was already walking that back. So that's a difficult prediction. I made it myself a few times over the course of the past year and been proven wrong every time. So I'm a little bit more reticent to dive into that fire. We'll see if Matt sticks to his guns or not. Facebook was at 307.10 going into their announcement. They were pricing in 4.7%. They delivered 5.5%. Again, this is immediately after the announcement. This is immediate post-earnings blush, listeners. Of course, if you hold on to them a little bit longer, that frame of reference is going to change and the performance is going to change. This is just immediately after the announcement. Qualcomm, 136.5 going into their announcement. They were pricing in 4.9%. They delivered 3.8%. Let's go on out. Mickey D's, 232 and about a half. They were pricing in 2.4%. They delivered an anemic 0.6%, so still a little underperformance there. Apple, you know, this was an interesting one because they were pricing in 3.6%. They were trading 133.5 going into their announcement, and they delivered right after the announcement a whopping 0.4%. So all that vol got squeezed out of that balloon in Apple land. That seems like we're still on par for an underperforming cycle, listeners. Of course, today's action could change that, but in general, we're seeing about a 59% right now in terms of what we're seeing bang for your buck wise for the season in terms of 100% being for your vol buck, you got $1 of movement. And right now you're getting 59 cents on your vol dollar. So once again, looking anemic out there in vol land. Mr. Meatball, I know you guys watch single name vol over there in your Robinhood Trader and indeed in your Pitch Chat. Any of this surprising you that in spite of Matt's bold prediction last week, we're still not seeing the vol outperformance, sir?
I am not surprised. The VIX is still pretty expensive, which means options as a whole are expensive. We did see some kind of wild moves out of Amazon. Apple has been kind of interesting and anemic. On my screen, things that really blew up are Twitter. Ford absolutely got punched yesterday. It's recovered a little bit today. And Microvision. This has been a really hot one. And I don't know if you've seen MVIS, Mark, but it has been a hot one. And they took that thing out to the woodshed for earnings yesterday. So it'll be interesting to see whether this kind of mini meme, because the rumors are it might get acquired by Apple, is going to get some recovery here or not.
I'm doing a quick scan here through our earnings reports to see if we have Microvision on there, because you're right, they're getting shellacked today, off 3.25%, nearly 18%, trading about $14.75. I want to see if we have an earnings move or earnings move results. I do not believe we have one for this name out here. But again, listeners, you guys can check for yourselves over there, theoptionsinsider.com. We've got dozens, if not hundreds. We have every other M ticker out there except for Microvision, it seems like. But a lot of names were popping off. Let's look in here really quickly. So many M's in our list. We need to sort them alphabetically. Make my life a lot easier. You know what else makes my life easier, listeners? It's you folks and your questions and your comments. Let's get to them. A little bit of the old volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail, the portion of the show you folks take the reins, your questions, your comments, your insights, your pearls of wisdom. Let's kick it off by paying off a couple of polls that we had recently that were going fast and furious. First off, on the show last week, we were talking about deceptively simple poll at first blush, but it turned out to be perhaps the most divisive poll we've ever done for our audience. At one point, it was exactly split, 25% each, which was just fascinating to me. Of course, we asked you this time last week, which level will we hit first? Very simple, deceptively simple question. Give you four choices. A VIX of a 14 handle, not looking that good today. SPX of 4,300, also not looking that great today. Bitcoin at 70,000, excuse me, I haven't pulled it up today, but I don't think we're at the 70,000 level. And a WTI at 70, also not there today. And you folks, first off, hot and heavy with Bitcoin. And then it seems like as the week progressed, all of a sudden these other products started to come top of mind. And it ended up, after being evenly split for a little while, it ended up with VIX at a 14, just barely, just slightly edging it out with 26.3%, following by the S at 4,300 at 25.3%. And then a tie for number 3 there between Bitcoin at 70,000 and WTI at 70. So you folks all over the place, which is fascinating to me. And that's what makes a market, right? That's what you guys have all different opinions out there. But that to me was fascinating that it ended up being so close in all these disparate products out there. Also, we know what wasn't close, but unfortunately wasn't correct. Of course, this week we had Tesla earnings, so we dove back into that fun guess the largest options position. You guys love that one, especially when it comes to Tesla. I thought by now we've done it enough times you folks would kind of get the theme of what usually is dominating the tape in Tesla, but you folks love the bullish stuff. We asked you which of these positions in Tesla is the largest. We gave you 4 choices: the June pars, aka the 1000s, the March 2023 900 calls, the June 2022 1 puts, $1 puts, and the Jan 2023 120 puts, so $120 puts out there. And you folks, once again, piled into the June pars, nearly 60%, followed by number 2, the March 2023 900 with 18.7%. The Jan 2023 120 puts at 13.5%, and bringing up the rear with a paltry 9%. The June 2022 1 puts. I ask you all out there, have you not heard our catastrophe put reports on Tesla before? Because you know what always dominates the tape in Tesla. It's some garbage put, and that's exactly what it was out here. It was well over 100,000 of the June 2022 $1 puts are at the top of the list. All these are real positions, by the way, out there in Tesla, and they're all open for size, but the June puts are more than 2x the next largest position out there. So unfortunately, only 9% of you saw through the hype, the noise around Tesla to pick the right answer, which was the June 2022 one. But you know, we put it out there like that for a reason. We know a lot of you are going to bite if we put something like the June pars out there, and that's exactly what happened. So congrats to the 9% of you who saw through the hype. Mr. Matt, I'm curious for you, going back to our earlier poll there, just how I was surprised at how just split our audience was at lower vol or higher market levels or Bitcoin or at WTI. You've been around the space for a long time. You've been in the vol futures space for a long time. Are you as surprised as I was, Matt, that our audience was pretty much equally split amongst all these 4 products, sir?
Yeah, that's a good question. I think that, that level of dispersion amongst answers is kind of an indication of the lack of agreement within market participants. So I think that's a pretty interesting response to the poll. So, but that's what makes a market, right? So I think that I'd be more interested if you saw the answer pinpointed on one particular item. That would be, I think, more revealing and more, revealing a particular groupthink. The fact that it's dispersed kind of tells me that people have all different types of ideas about where this market is going. So, and usually when you see something pinpointed on one particular item, I tend to be a little bit of a contrarian in that regard, that if everybody is thinking in one particular direction, it's likely to go the other direction. So the revealing thing about this is that there's no particular groupthink going on here.
Yeah, that was interesting to me. Right, it makes a market at the end of the day. Everyone pulling at different strings all at the same time. It kind of makes things fascinating. You know what isn't fascinating is this comment from our chat here for you, Mr. Meatball, from Mr. Unlimited. He says, congrats on that Fields pick, Meatball, but he should have been a Lion. Okay, first off, he gets no congratulations. He's like a freaking Cowboys fan now or something. Who knows what the hell he is down there deep in the hearts of Texas. So A, he gets no congratulations on any of these picks. And B, living here in the heart of Chicago, I may be a transplant. I grew up a Pats fan, but I've renounced them for years, and I've slowly been acclimated into the world of the Bears, as mediocre as they have been. I am raising a Bears fan, so he's dragging me kicking and screaming into the world of Bears. And the one guy I wanted them to draft was this Fields guy. So I will take the congratulations. Mr. Meatball, I don't know what the Cowboys did, but congratulations on all that, sir.
Yeah, no, the Cowboys.
Or are you more of a Texans guy now? Are you a Texans guy?
I have DirecTV, and my wife is like, DirecTV is the worst. Why do we have this? And I'm like, it's the only way we can see Bears games. And she's like, all right, well, I guess we'll keep crappy DirecTV. So I have me and my son have retained all of it. I will go out on a limb and bet that my 11-year-old is the only person in the state of Texas with a Gale Sayers jersey, a Walter Payton jersey, a Dick Butkus jersey, and a Khalil Mack jersey. So, he has maintained his. Both of my children sleep in bear sheets. And I would too, but my wife won't let me get a Bears cup. So
you have the Bears underoos. That's good enough, right?
Yes, exactly. Now, So No, I think the field pick was good. I think that they gave, I don't know. I love that they kept their second and third round pick for today. The only issue I have is the general manager and the head coach. Are they going to be able to take this talent, or is it going to be like, Lenny from Of Mice and Men, as it has been with so many of their picks?
Yeah, that's the one downside of this pick. It's a good pick, which unfortunately may actually prolong them into getting more years under contract. Otherwise, they would have been out at the end of this year. But again, this is not Football Weekly. We could probably have that on a later after-hours show if we want. Let's go on out to this, Matt. This is right up your alley. It's a comment from Nichols with a Z. He's saying out here, he says he's been wading into the Spikes options waters lately. Mostly small lots to start. Well, that's a good way to start there, Nichols. He says, I agree that the things seem to be tightening up out there. It's getting easier for me to get in and get out, loving having something else other than VIX on the board to trade vol. Well, there you go. That's, Matt, that's one of the things I've been keeping an eye on for a long time out there in Spikes options. Obviously, the big trades, the big prints are good. They're the lifeblood of a product, but over time also, you want to be able to let the small folks get in there. So I always keep an eye on the 5 lots, the 10 lots, the 20 lots that are going up. So it seems like Nichols is discovering what I've been seeing out there a little bit as well, is that maybe these incentives you've been working on, Matt, they seem to be paying off a little bit. We're getting more small paper out there. And as he mentions, getting a little bit easier for some folks to get in and out of there. What are your thoughts on what Nichols has to say here, Matt?
Well, yeah, I really appreciate Nichols' comment there. And I think, when I joined, and as I mentioned earlier in the show, I've been focusing my efforts primarily on building liquidity in the futures product, but of course that has downstream effects to the options product as well. So, the liquidity providing community can provide better markets on the options to the extent that they have a more liquid underlying futures market. So, as the liquidity in the futures has been improving, liquidity in the options has been improving as well. And we're going to continue to improve liquidity on futures. So I think that the options liquidity is only going to get better. And like we're doing in the futures now, adding more liquidity providers in the futures, we are going to do that in the options as well. So I think Nichols' experience is only going to get better.
I'm not sure if it's going to get better in our crystal ball, folks, but let's go try it anyway. It is time to wrestle with the volatility gods once again. It is time to open up our crystal balls.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Crystal Ball, the portion of the show where we attempt bravely, courageously, dare I say it, to venture forth and predict what the volatility gods hold in store for us this time next week. On the show last week, we were most of us leaning around where we were or slightly lower. Mr. Amberson over there at ORATS, he was the one guy stepping out of that a little bit, saying he thought there was going to be more vol on the tape. He actually picked pretty much a 20. 1999. And we all kind of scratched our chins at that and said, it was intriguing, but I went a little bit lower. So did the Rock Lobster. He went lower than me. I was at a 1685. Mr. Rock Lobster came in below me at a 16 and a half. And it was looking good one of those again until it wasn't. And Matt was actually looking pretty good. He was looking better actually earlier today, actually, in Spikes. He got up to that level, pretty close to it, like about 1890 or so. So it's there again, 1891, and just ticked up again to 1890. It got up as high as 1892 today and just ticked up back to 1891. So he's close to within a point in Spikes. Out there in VIX Cash, a little bit of a different story, kind of languishing a little bit about 1835 or so. So a little bit lower there. But both the Rock Lobster and I are both multiple handles away. So no winner this week, even though Matt was technically the closest out there. So I know, Matt, in your first show, I won't make you dive in to wrestle the vol gods. That's a tall order for anyone on their first show. So instead, Mr. Sebastian, you haven't been on in a little bit. I didn't win last week, so I will be charitable. I will allow you to pick whether you want to go first or last for next week.
I'll go last. and you can go first.
How did I know you were going to throw me under the bus? All right. I'll bravely venture forth, see what the vol gods hold in store for us. At about 1835 in VIX and about an 1890 or so in spikes out there right now. So feeling a little bit juicier this week. This has kind of been we've seen this record play out a few times now in the past. See the erosion. Oh, bam, there's a spike, pun intended. Then see the erosion. Oh, bam, there's a spike. The question is, when does the spike come? How close is it to our show? If it's earlier in the week, we'll be pretty good towards the end of the week if you're wagering lower. If it's closer to showtime, makes it Matt's upside picks look a little bit better out there. So that's the question we're wrestling with right now. I'm going to say we're going to be lower this time next week. Not a ton, but lower. I'm going to say we're going to be this time next week. I'm going to say 1755. All right, Mr. Meatball, the door is wide open for you, sir, to drive a truck through. Where do you want to go?
20.
20 even. Yeah, I had a feeling.
We're going higher.
I had a feeling you might be guessing a little bit more on the upside. What is it?
I know, it's so opposite of me.
I know. That's strange. What is it about you that's signaling higher for you?
The vol futures are seeing in both spikes and VIX seem really peppy today. And, they're not using the options to hedge, but they are stepping in vol futures. They're using VXX. They're clearly using UVXY. So, I'm wondering whether there's a little bit of follow through here.
It wouldn't surprise me. That's the one thing that gave me some pause is just the lack of reticence out there to pop vol on a moment's notice out there. So that is certainly the wild card right now as we wind down the show. All right. Unfortunately, listeners, that music means we've come to the end of our foray here through the world of volatility. What are you folks feeling out there from a vol perspective? Higher or lower? It's very much coin flip for this time next week. Hit us up. Let us know what you think. And Matt, you did an able job holding down the MIAX hot seat for the first time. But before we go, folks know where they can go to find spikes. But in addition to that, you're working on some other cool stuff over there in the futures realm. Why don't you give our audience a little bit of a tease of what's coming down the pike from MIAX, sir?
Yeah, thanks, Mark. And yeah, it was a pleasure to be on your show the first time. MIAX announced recently that we are going to list corporate tax rate futures on May 24th. This is a new product that will allow market participants to hedge their exposure to changes in corporate tax rates. The product will settle to 1 minus the highest marginal corporate tax rate. And, this is a show about volatility, and historically U.S. corporate tax rates have been quite volatile. So it's a real risk that people are exposed to. And so we're excited about the product coming out. Essentially, I think about it like a Fed funds future where essentially the market is communicating what the expectations are of where corporate tax rates are going. So that's what our term structure will be communicating out to the market. So excited. We partner with Susquehanna on this. They will be our liquidity provider, and excited to launch it on May 24th.
A very timely product indeed, sir. Corporate tax rates very much in the headlines again. So that'll be an interesting one to keep an eye on. We'll keep an eye on all that when that launches. Yeah, you said coming up pretty soon, May 24th. And you already know where to go to find out more about spikes and everything else in that neck of the woods. MIAXoptions.com/spikes is the place to go for all your information. You want the back data. You want the historical data for spikes. You want the current data, where it's trading right now. You want press releases. You want perhaps a link to a cool volatility show called Volatility Views. I ask you, what more could you possibly want from a vol-oriented destination? It's MIAXoptions.com/spikes. And you know where to go to learn more about execution services and trading technology. There's only one place to go, matrixexecutions.com, MATRIX executions.com, the place to go. Also give them a follow on the old Twitters at MatrixEXTech to learn more about all their updates there in between episodes of Volatility Views. And last but not least, Mr. Meatball, if folks are intrigued, they want to check out the Pit Chat or the Robinhood Trade or anything else you guys have cooking, where should they go? What should they do?
Yeah, go to optionpit.com. I put out content on VIX, spikes, and volatility every day, as well as other long-form commentary. We have writing several blogs every day. And, I'd like to actually take this moment to make a big announcement. In conjunction with the Options Insider Radio, I am launching with Mark Longo a new podcast called Foot-Volatility. I thought you were going to say
you're becoming a Houston Texans fan.
Monitoring football. Our first guest, the premiere of the show will be next week. First guest will be one Mike Tusaw, ex-NFLer and current financial manager, and we're going to bring on the best ex-football players that are in the financial space, as well as discussions with live football players, current football NFLers who have questions about their financial future. That's right, Foot-Volatility with Mark and Mark. Stay tuned, folks.
I would listen to that.
I actually would too. I would totally listen to that.
You're joking, but as we've seen the sophistication of the wagering vehicles and platforms increase, right? I have been toying with something like that because it does seem like the time is getting ripe where you can actually start trading the volatility almost in a lot of these products out there.
There's so much game theory there. So I was actually really proud of my son yesterday. A kid walked up to him and bet him $5 that the Giants would draft Devonta Adams. And Mark was like, wait a minute, you're going to bet on a specific player and I get everybody else. And that kid was like, yeah. He was like, okay, done.
You're teaching him well, sir.
I know. It was a good game theory, son. So, I think there's a space here. So stay tuned, folks. It started in jest, but some of the best ideas are created by, a joke where people go, that's actually a good idea.
There you go.
So stay tuned.
Stay tuned. Foot-Volatility coming soon, brought to you by, let's say, a DraftKings or a FanDuel or one of those out there. So stay tuned for that. Of course, that concludes our broadcast week here on the network. I want to thank all of you out there who joined us throughout the week live and after the fact. We love you all. We'll be back again on Monday, kick it all off with the option block all the way through till Friday and another episode of Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at MIAXoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution in trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.